Hello, everyone. I am Dheeraj Sinha, founder of Quantiple FinTech, and with me is my colleague Hussain Syed. And we welcome you to this brand new video series on Nifty and some of the other important Indian stock market indices, where we are making an attempt to combine the technical analysis with the new wave analysis and give you a look ahead of the coming week. Now, there are many video series which are available daily, weekly, which gives forecasting or the analysis of Nifty, Bank Nifty, and some of the other indices. What we felt was that there was a need to combine the NeoWave with technical analysis and better that forecast. NeoWave, as some of you may be knowing, is an extension of Elliott Wave, but much more stringent in terms of its rules and thereby better in terms of the forecasting ability. Since it is more stringent, there are very few practitioners, and my colleague Hussain is an avid practitioner of NeoWave, and that is why we are combining the technical analysis ability with the NeoWave and hope that you like it. With that, let me take you to our main presentation. Let me start by sharing my screen and take you to the entire presentation. Please bear with us as we do so. So as we mentioned, we plan to do a weekly series, and this is NeoWave combined with the technical analysis. Before I do any further analysis, let me put the disclaimer. This is just for the analysis and the education purpose. While I talked about Hussain knowing about NeoWave, me having a good expertise in trading and investment, we are by no means expert. Neither we are SEBI registered research analyst or investment advisor. So whatever advice or whatever discussion we are having in this particular video, take it with a pinch of salt. And please, please, please don't take any investment or trading decision based on the same. If you're taking any investment or trading decision, you're solely responsible for that, and we claim no responsibility whatsoever. With that disclaimer, let me get into the main content. And the way we have structured today's presentation, we are going to talk about the price action. And for today, we are going to confine it to Nifty 50. We will also look at the US market data because there is a lot of data that came last week. And the way the US market behaved has a very direct implication on the Indian markets. We are also going to look at a few technical indicators, not too many, because we don't want to bog you down with a lot of technical indicators. We believe more in the price action than on the technical indicators. We'll look at a few key ones. We will also combine that with the option data and the FII data. FII data, because they are very big player when it comes to the futures and option market. DIIs play mostly in the cash market. Since we are talking about Nifty and futures and options, very relevant to look at their data. Now, while I will talk about all this, after that, I will hand it over to my colleague Hussain, who is going to take you through the new wave. And that is where the icing on the cake comes, because you start seeing a bigger picture. On technical analysis, we live on a candle to candle basis. But when you look at the neo wave, that gives you the direction, that gives you some sort of a predictability in what actions you're taking. And that is why you don't get killed by the whipsaws. So with that, let me take you to the trading view screen and see what is Nifty saying. Since it's a weekly analysis, let me start with the weekly candle. Very clearly, after hitting the high on the week of 17 July, which was close to 20,000, 1991.85 to be precise, we have seen 5 weeks of downfall. Now, while each downfall was concerning, what is more concerning this week's fall is that it made an attempt to take out the high of the previous week. If you see the previous week high was at 19,482. And this week on Thursday, in the first half or the first hour of the market opening, we went all the way up to 19,584. Bank Nifty looked to be breaking out, but what a fall after that. That was a trap, of course, in the hindsight. When that was happening, even I went ahead and I sold some close by put, and after that I had to do the firefighting to save that. So when I look at this particular price action of this weekly candle, which is formed in the Nifty. You can call it an inverted hammer. But clearly, the upper shadow is too big for the comfort of the bulls, and the price has closed very close to the down or the lower part of the weekly price action. So this is certainly a bearish indicator. Let's look at what the daily candles are saying. If you look at the daily candle, again, there was a gap down, and while it tried to go up a little bit, there was no meaningful pullback, and it's a very small body candle. While it didn't fall rapidly, didn't breach those support areas that we are talking, it was still fairly bearish price action. So on a daily candle, also price action. If you look at, we have a few gap areas on Nifty when it was going up. So there are chances that the next real support we may get at 19,000 or thereabout. Okay, if you look at the when we turn bullish, that is where you have to clearly take out the high of Thursday, which is 19,584. But to be comfortable, it has to take out 19,645. Only when Nifty goes above 19,645, you can say that, look, the worst is behind us, and we again can make an attempt to 20,000. Till then, I will be circumspect of any positional bullish trades. Of course, on a smaller time frame, you can take a bullish trade. Now, let's quickly look at 75 minutes chart. And why 75 minutes as opposed to an hour? Because 75 hours equally divides the 6 hours and 15 minutes of the action that happens in the Indian market every day. Clearly a very, very bearish kind of thing. You see there is some sort of a channel getting formed, lower low, lower high kind of structure. And of course, this was higher, which was in hindsight proving to be a trap. But clearly, we are seeing a lower low. The ATR, this line here is the ATR. That is also created a, it has gone up a bit, which is not a great sign. I'll quickly look at on a daily chart some of the indicators, and my favorite indicator is, of course, a very simple one, which is the moving average. Now, if I just look at the moving average, and I have put the 20 moving average and the 50 moving average, yesterday, after a very, very long time, which is after 6th of April, right? After 6th of April, or rather, after 6th of April, for the first time, Nifty has closed below the 50-day moving average. This red line here is the 50-day moving average. And one thing which I can tell you based on my experience in the stock market is that whenever the price starts going below 50-day moving average, it's not a good sign. So be very careful. Now, we looked at, and an indicator today, I looked at, of course, I can look at a super trend, and, super trend is bearish on a day time frame. It is bearish on a 75-minute time frame. I think it may still be bullish on a weekly time frame. Yeah, it is still bullish on a weekly time frame. But then, if it comes down to where we are expecting it may come down, it may turn bearish. So technical indicators, and I use super trend setting 10-2 rather than 10-3. So technical indicators saying bearish, price action saying bearish. Now let's look at what the US markets are saying. And this is where, let's start with some of the data outside of, say, key indices like S&P or Dow Jones. So when we look at the, when we look at the US 10-year bond yield, very clearly the US 10-year bond yield is 4.239. This is the weekly chart. Let's, this week has been a doji, last several weeks, last 5 weeks, it has been going up, and that is reflecting in their markets. If I just look at what happened to the bond yield in 75 minutes, there was, after peaking at 4.283, it is down to 239, little bit down, but still too high for the comfort. If you look at the dollar index, which is how dollar is behaving against the other currencies, particularly in the Indian context, that becomes very important. If the DXY becomes stronger, then there is an FII outflow that happens because it becomes more lucrative to invest in the US stock market. Again, very clearly an upward price action. Let me just look at DXY on a daily chart. It is forming some sort of a channel. I can draw a channel, but I think you can clearly see it visually that it is a clear upward trajectory. So what's happening in SPX? What is happening, which is the S&P 500 index, which is one of the key indices of US market. If I look at the daily time frame, there was this big bearish candle which was formed on Thursday, and that was all attributed to the news that was coming from Jackson Hole. But even when I look at Friday, the second half, it gave a little bit an upside. I was trading actively in SPX on Friday, and I definitely saw an uptick on the second half. Now, there is a possibility that they may impact the market opening tomorrow, and we may open. If you look at GIFT Nifty, that is showing 40-50 points up, so it is highly possible that we may open 40-50 points up, and maybe we will try to make an attempt on the upside. But whatever we have discussed so far, it looks fairly bearish. Let's quickly look at the option data and the FII data as well. And for that, let me take you to the chart, which is given by Sensible. Clearly, if we look at the Sensible chart, let's look at the FII action and the index options. If you look at the calls, there was a net buy of 1.26 lakhs. While it is bullish, I would put it as very, very mildly bullish because this number is not very big. 1.26 lakh net buying in call is not very big. For various purposes, they need to do it. If I look at the put, this is where the real story is emerging. There is more than 4 lakh quantity of put long as opposed to put short. And this clearly shows that the bias is bearish for the FIIs. If you look at the cash market, FII sold 4,638 crores, whereas DII have been supporting with 1,414 crore. If I look at various days, clearly on Friday, there was a heavy selling from FII. On Thursday, they bought 1,500 crore, 614 crore. Some of them, these are the bulk buying as well. But rest of the days, the week, they were on a negative side. So overall, FII data is bearish. Okay. Now, if I just look at just give me 1 second. If I just look at the data that is there on the option data, if we look at the open interest and I look at the cumulative open interest as it stands, you can see that there is a lot more call with PCR being 0.7. So it's clearly bearish. However, once it reaches about 0.7, 0.65 kind of range, there is a chance of a pullback. And that is something which we may see on Monday or part of Tuesday. And then the PCR will become 0.85 or 0.9, and that is when further call riding can happen. If you look at where the maximum OI is there today, it is at 19,500, call 1.22 crore, which is a very significant quantity. And what is more important is not only at 19,500, you look at 19,400, you look at 19,300, even at 19,300, which is very close to 19,265, where we close on Friday, there is more than 1 crore call OI. I recall just about a year back when we used to look at 1 crore OI, we used to say that it will not get broken. But now there are so many retail traders with big money who have jumped in the market, and they're mostly the option sellers that, 1 crore is not a big OI and it can change any moment. And if there is a gap up on Monday, you will see that falling and very quickly the put side OI getting built. But then there is still some relevance, though I am realizing more and more that OI is becoming less relevant for any analysis, right? If you look at put, 19,000 is where there is some meaningful put OI. So 19,000 to 19,500 seems to be a range. Now with that analysis, I would like to hand it over to my colleague Hussain to take you through the new wave. Let me record. Yeah. Hi, Hussain. Let's start with
Hi.
this new
Okay,
wave
so
and how's Nifty looking on the new wave charts.
just bear with me, and this will be a little since we are doing it for the first time. So you'll just give me some rope, and this might be a little haphazard, but I'll try to do the best job that I can.
Sure.
So we start off with the day chart, which gives a weekly neo wave count, right? And we are starting off from Thursday, 20th of July, 2023. So we're trying to analyze this entire move. The reason we are not looking at the past is because we will make money only what happens next. Whatever is in the past is history. Obviously, for this presentation, we'll just look at what's happening over here. If you look at this move that has come down from the high of 19,991, we had some kind of pullback. The first three waves are simple mono waves, okay? But what we see is the retracement for wave B has taken less time than the initial push to the downside in form of wave A.
Right.
In NeoWave, we have various patterns. You always want to look at two legs to figure out what's going to happen in the third one. Each analysis of every mono wave or wave in a particular direction is done on price, time, and complexity. When we see wave A, and I'm just going to mark it for you from here to here, wave B has taken less time. This gives you an idea right here that we might be forming a triangle. And this would not be a zigzag or a flat, because in both those patterns, wave B has to take more time than wave A.
Right. So
Through a
basically, you
process,
are doing a process of elimination.
that's right.
Right. So
You
you are
stole the words from my mouth. It's a
right.
process of elimination.
Right.
Now, assuming this to be a triangle from the word go, we want to see what does wave C do, right? So wave C, if you apply a FIBO analysis, and I'm going to avoid doing that over here, because it'll kind of mess up my entire presentation, but wave C is larger than wave A, okay? In a triangle, wave B and wave D will alternate. Again, they will alternate in price, time, and complexity. So the complexity of wave B is a simple mono wave. So wave D will be a pattern. And wave D in itself is a flat pattern. We call this a C failure flat because it has not gone over wave A.
Right.
And then we had a violent move to the downside. Now, since wave C is larger than wave A, the chances of an expanding triangle are high. There's a high probability that wave E will be bigger than wave C in terms of price. So we look at what is the minimum requirement, because maximum can be anything, right? It can be 161% of wave C, 261% of wave C. We don't know. Look, since we are looking at this pattern in
So we are right now in
isolation,
wave E.
we are right now in wave E. That is over here. Everything marked in blue.
Right.
The minimum requirement for wave E is to go even 1 point more than wave C. Okay, so I'm not going to say maximum, and what happens is people start developing a bias. So we look at what is the minimum. हम लोग safe कहाँ बनेंगे? So it has to go even 1 point below 19,090. It can go 19,089, or it can even go up to 161%, which is 18,791. So what we have is a range. We have minimum below 19,090 till about say 18,791. Now, why it can't go below that is, into a bigger count that we will see on the monthly chart. But for our intraday play, let's just, narrow it down to these charts so it becomes easier to play. Yeah. Now, let me take you on to a 75-minute interval.
So key level is 1990. It has to go below 19,090.
That is right. So if you have, for call sellers, if they have sold anything above 19,400, 500, 600, you guys are pretty much safe, because this entire pattern has to end below 19,090.
Right.
Now, depends on whether you've taken a weekly call or you've taken 2 weeks. That your money management you have to do. Right?
Right.
I'm just going to turn on the candles. When we come down to a 75-minute chart, what do we want to see? The last rising leg. And allow me to just switch between the two so it becomes a little easier for you to know what I'm referring to. If you remember, this was our C leg. This was the C leg of wave D. इसके अंदर क्या बना है वो आपको लोअर टाइम फ्रेम पे पता चलता है. Okay, so that was the day chart giving you the weekly time frame, weekly wave count. This is the 75-minute chart giving you the daily count.
Right, right. And
This
we are analyzing the wave C
of wave D.
Wave D. Yes.
That's right. Now, the last leg of any pattern can be a terminal. Okay. So, what are the requirements of a terminal? That wave 2 and 4 will overlap. Wave 3 cannot be the smallest. Got you?
Right.
And the post pattern implication after wave 5 is that this entire 5-wave move must be retraced in half or the same time that it took to form. If I use a simple triangular method,
thing, right? Let me just elaborate a bit for our viewers.
Please.
I think the main thing is whenever this terminal impulse gets formed, which is loosely correlates to the diagonal diagonal impulse pattern in the Elliott wave. The way you trade is the post pattern implication, where you can see that once this pattern is over, it retraces that entire move in half, or almost half of the time, right?
Yeah.
Did I put it correctly?
Absolutely. And for easy reference, if I just put a simple rectangle, which represents the time taken by these 5 waves, and I move it to the right, you will see that it's less than 50% time the entire move has been retraced.
Right, right.
So if you can spot this, I mean, you'd have made a pretty penny in these 2 days.
Right, right.
Right. Now what we want to see is, chalo, ye to ho gaya, iske baad kya? Right? Now this is all history. You're not going to make money even identifying it today. You want to see ki yahan pe kya ho sakta hai.
That's right.
When I look at the 75-minute chart, and I've had this conversation with many people that why not 1 hour chart, why 75 minutes? So I'll just address that, elephant in the room. 75 minutes divides the day equally. You have 5 candles, each candle is 75 minutes. On 1 hour, the last candle is only 15 minutes. So you want to use, especially in NeoWave, candles giving you equal amount of time. Gotcha? So यहाँ पे मैं क्या देख रहा हूँ कि थोड़ा एक बेस बन रहा है. ओके, इसके अंदर क्या बना मुझे I'll get to see it on a smaller time frame. So I switch to 15 minutes. Now when I switch to 15 minutes, what do I see? Like I mentioned earlier at the start, that in NeoWave we require 2 waves to predict the third one.
That's right.
This move to the top side, okay, this is a single mono. This is, I'm going to take this as wave A, कि यहाँ पे कुछ तो हुआ है, कुछ तो ऊपर की तरफ गया है. These waves to the downside are a reaction to this action. Okay, so you have action, you have reaction, you can expect action again.
Right, right.
The internals of wave C, I've taken A, B, and C, because this cannot be a triangle. Wave C in a triangle can never be the smallest. And hence I say that, this is wave A, wave B is a pattern, and we have wave C going to the downside. When I look at this entire structure, A, B, it has retraced less than 100% of this up move.
Right.
In a normal flat pattern, wave B takes more time than wave A, and a normal flat retraces, the B wave retraces wave A between 81 to 100%, which is exactly what I can see as of right now. That's why I say that Monday opening prices will reveal whether we have started wave B or not. I wouldn't be surprised if this is what we see.
This is now wave B or wave C?
On a 15-minute, this will be wave C.
That's right.
But then when we move higher onto a 75, we will say that this is only wave A of wave B if it does not subdivide, and then we can, see some kind of pattern happening over here. Basically, what I'm trying to say is that on a 75-minute chart, let us make an assumption that 19229.70 is a short-term support. Okay. We should retrace minimum 38%, which is 19364. And the time that it should take is more than the time taken by wave A. Through the process of elimination, I would first consider, since I have only one wave on the 75-minute chart, I need to see what does wave B look like. So till I don't see a wave B on a 75.
Somewhere on Wednesday?
Tuesday for sure.
Okay.
So if I'm just going to use a fib time and, see if we open somewhere here, this wave may shift. So based on what information I have, I will say at least Tuesday.
Okay.
So whole of Monday may go in retracement. Now, we want to see how that action plays out. If we are to consider our allies, that is the basically US market, I'm just going to take you here. We have had some kind of up move in the Dow.
Right.
The Dow, Nasdaq, and the S&P has moved to the top side.
Yep.
So if I was to, take a no-brainer opening on Monday, 40, 50 points to the top side is a high possibility.
Right.
So that's what I have in NeoWave as of right now.
Great. So just to summarize, what we are saying for the next week is that it is possible that we see a retracement first on Monday and to some part of Tuesday, which will take the price to a 19364 kind of level. Right. But then there is very highly likely there would be a fall. And in that fall, that is when the larger wave E in the structure that you were saying, this is part of the wave E structure, right? But that can fall to 19090 at a minimum. And if it goes beyond that, it can go even up to 18761 thereabout level. You'll have to check the exact. Right.
If I was, to just say what are the probabilities of it to go to, 18,791, I would say that, going to below 19,090 would be my first target. We'll have a lot more information once it reaches there, and we can see the lower charts and see what kind of pattern is being formed. Because wave E, a typical construction for wave E is a 3-wave pattern. But we have another option also, that the last leg of an expanding triangle may take the properties of the entire expanding triangle. So we may have 1, 2, 3, 4, 5. And if you bear with me for a second, I can actually show that to you on this time frame. That would be on the weekly. Yeah, right here. This I am showing you of 25th October 2021. This is an expanding triangle. And if you see this last leg, it's 1, 2, 3, 4, 5.
That's right.
And here C is bigger than A and E is bigger than C. So this last leg has taken the properties of the entire expanding triangle.
Correct.
This is on the weekly chart, and patterns repeat themselves on every time frame. So to come back to where we were, I would say that let's just, see what happens on Monday, where it opens. We have a tentative up move on the 15-minute to somewhere close to 19,364, which coincides with our 75-minute chart as well. 38% to 61%. Right. Somewhere in this range. I'm giving you a range so that it becomes, easy to make a quick decision. And we need to see how much time wave B takes. Right. Then we can predict wave C And we know that, okay, even if we sell FA OTM options, 19090 is a high possibility.
That's right. That's right.
Great. If your M2M looks a little red on Monday, you don't need to get nervous. You know that you're going to get your DK and you're going to get your delta in your favor as well.
That's right. Is going to be sell on the rise market. Price action fairly on all the time frame is looking bearish. Some of the key indicators looking bearish. I would request you to particularly keep on looking at 50-day moving average and how Nifty is behaving there. If it falls below 50 days moving average and stays there, that's not a good sign. Sooner it starts closing above 50-day moving average, better for the markets. The option data is bearish, tending to be oversold, and the range from the option chart seems to be in the range of 19,000 to 19,500. FI data is bearish. US market data, despite the bounce on Friday, looks bearish. And you heard Hussain talking about the NeoWave very clearly. It is showing an expanding triangle pattern, and we are in the wave E, and we can expect a pull back to say 19,350, 360 range. And probably that would be the time when you can see the price action. If the price action is showing some sort of a resistance coming there and a bearish bias, then you can go ahead and sell 19,500, or to be on a safer side, 9,600 and above call. And once it falls, then of course, to optimize your margin, once it has fallen about 150, 200 points from there, if you want to sell 18,900 or 19,000 put, you can take a chance with that. With that, we would like to conclude today's sessions. Once again, whatever we have talked in this video is for education purpose only. It is just our view and analysis, and we are not your investment advisor. So please take any financial decision based on your own judgment or the advice of your financial advisor. Thank you, and all of you have a wonderful rest of the day and a wonderful trading week ahead. Thank you. Now, this is a very good summarization, Hussain. Everything, if you look at what we did in terms of the technical analysis and the NeoWave analysis, overall, it seems that next week